Hey everybody, James Cordes here with the Mora Group. Thanks for checking in. It is middle of July, your mid-month market update. Let's jump into it. Some really good inflation data that came out last week. We're talking about June CPI and PPI. CPI came out Thursday. That was the best news of the week. They had a projected inflation reading of 3% as opposed to 3.1 to 3.3, which was the projected. And while that seems like kind of minimal, small numbers, that's a huge difference in what was projected and what it came in at. It shows that the economy is cooling as projected. And the Fed, more importantly, took notice of that and had some really interesting things to say last week. The PPI on Friday did come in just a little hotter than expected. That's not the more favorable reading between CPI and PPI. And so Thursday's result did actually carry the market a little bit lower and really opened up a lot of conversation last Thursday and Friday about Fed rate cuts. Now, everyone is talking right now about the possibility of a Fed rate cut in September. Okay, the next Fed meeting is the end of July, July 30th and 31st. There's about a 10% chance that there's a Fed rate cut. Although some people are saying that with the news this past month, it's possible it could happen. Likely not. Everyone is kind of marking their calendar for September 17th and 18th. That September Fed meeting, that is when a lot of people are expecting a 25 basis point rate cut. 90% chance a lot of investors are saying that we see a rate cut there. And on top of that, maybe two more after that, more likely just one after that for 2024. One of the data points that came out last week that made a big difference is the unemployment rate. Unemployment, it ticked above 4% for the first time in 2 years this past June. That is a huge number when they're talking about inflation and the economic strength of our economy. And seeing that helps the Fed look forward to what their next step is going to be, what they want to do next with the economy. And that obviously would have to do with rate cuts. Another really important element about rate cuts is this. Chairman Powell said himself that they are not going to wait until inflation hits the 2% mark before they cut rates. In fact, they want to do it before it hits 2% because it tends to take months for kind of the economic data and news to catch up. So keep that in mind as you see this 3% for inflation. Maybe we drop to 2.8 or 2.9 in July. Whatever it might be, we're not waiting to hit 2% before a rate cut. They're going to do that before they hit it because of that lag in information. Now, with all this talk or all this kind of new re-energized talk about rate cuts, there's a really important element to this that you need to know as realtors, as referral partners, when you're talking to borrowers or clients who might be sitting around waiting for this rate cut. A little inside baseball on how financing works. Let's say as we get closer to the September 17th, 18th Fed meeting, that there is a high likelihood, a high possibility that there is going to be a rate cut. Okay, there's just the economic data continues to be favorable for that to happen. There's a lot more Fed speak coming out that they want to do it, that they expect it, and it's just kind of a foregone conclusion that in September we're going to have a rate cut. Well, here's the thing. Naturally, people are going to think, well, I'm going to wait until that meeting when rates come down, and then I'm going to jump into the market. Maybe that's just what they needed. They need a little bit of positive movement in the market. Here's how it works in financing. As we get closer to this expected event, that starts to get priced into rate sheets. Almost all lenders would have a rate cut priced in before the actual rate cut happened with the Fed. If it doesn't happen, they would obviously pull back that pricing on their rates. But it's going to be priced in. So my advice to you would be to tell your clients, hey, don't wait for that actual rate cut when more people might jump in. Know that it's probably going to be priced in to rate sheets, meaning rates will be better before it even happens. And so maybe that's the good time to jump in and maybe get a week or two head start before everyone else starts getting pre-approved and whatnot because they're seeing rate cuts. Thanks for checking in today. I appreciate it. Some good news. Hopefully we get good news again in August with our July data. Otherwise, have a great second half of your July. Thanks again for checking in. We'll talk to you later.